Welcome to Dornbush download number 35, Michael.
Yes, Dan. Another Amazing. Wednesday, another download.
Unbelievable how quick it comes around.
They roll around, absolutely. Yes.
Fridays never come that quick though, do they?
Exactly right, yes. But Dan, bit happening in the zinc world. You've been doing a bit of research on the zinc side of things.
Yeah, unfortunately everything we've got in zinc's pretty much a penny dreadful, but I have been following one called ironbark zinc. They're in one of those cold countries, I think Greenland. It's really interesting. The warehouse levels of zinc is falling. There's mines closing. That Century mine up near Burketown, it's closing this year. And the market's really looking for new suppliers to come along. Ironbark have got an application in with the Greenland government to start a mine, and that's the big risk with the stock. If their mining application gets knocked back, it's all over, Red Rover. But if you're interested in a penny dreadful, perhaps you should have a look at Ironbark. All the quarterlies are out this month, Michael, so if you are interested in those sort of things, get in, have a look at the quarterly on the asx.com.au, and that gives you a good overview of the actual companies.
Yeah. There's some good fundamentals with zinc too, isn't there? You know, supply levels are reasonably low at the moment, aren't they?
Yeah, very low. Yeah, and one of the areas that they're thinking, you know, with the Chinese manufacturing cars, if they want to get the quality up to the European sort of quality, they're going to have to put more zinc in them. So, you know, there could be a big call for it in the years ahead.
Yeah, and again, we've said it a few times, haven't we? This commodity cycle, been doing it tough now for the last few years, so you know, you could reasonably guesstimate that we're probably due for a bit of a turnaround. So it'd be certainly one to keep an eye on.
It was interesting when the price of iron ore went up, wasn't it? All the short sellers heading for the doors on Fortescue. So.
A few got trapped on FMG, absolutely. Yeah. So, but certainly, Dan, too, I guess news next week. We kick off bank reporting season. 3 of the big 4. Commonwealth Bank, of course, already come to the table, but I believe Westpac's first off the rank on the 4th, followed by ANZ on the 5th, and then NAB on the 7th, and Macquarie Bank in there as well. They're on the 8th. So, of course, a lot of interest always in banks. Typically, most investors have at least one bank stock in their portfolio there somewhere. A general guesstimate, you know, cash profit for Westpac looking like coming in at around 3.9 billion. ANZ around about 3.6, and the smallest of the big 4 these days, the NAB, around about 3.2.
Boggles, doesn't it?
Extraordinary numbers as always. Yep. There'll be a few key themes. I think you know, market will be very interested in seeing bad debt levels. Bad debts are at, you know,
record lows,
low interest rate environment. Margins, I think, net interest margins will, will have a bit of pressure on them. I think a lot of competition out there.
Yes.
So we'll probably see net interest margins.
That's why they like that non-interest income, isn't it? The banks.
Yeah, absolutely. So capital levels will be another big one. Thought is that banks will continue to keep their DRPs rolling along, their dividend reinvestment plans, as capital adequacy levels are looking like increasing over time. But also their wealth management sectors as well, expecting strong performance there on the back of pretty much strong
share markets.
strong markets across the board, really, share market wise, and also the dreaded expenses levels, and again expecting anywhere between 3 to 4% growth in expenses, which is probably factored in to some degree, but certainly any sort of sharp rise in expenses will ruffle the feathers of investors out there. So yeah, be pretty keen to see how banks roll around next week, and where
their values have come off in the last few days, haven't they? So
they have, and you know, again, we've said it sort of a few times that banks are trading at historic high level or high PE levels, price earnings ratio levels, so around about 16 times at the moment, give or take, where, you know, we historically see them around about 12 to 13 times. So no doubt there's been, you know, there's a fair bit of fat built into bank share prices, and certainly too, as we mentioned last week, if Bendigo Bank and Bank of Queensland's profit announcement is any gauge, you know, both those shares dropped a bit in value after they brought their results out. Those expectations are pretty high, so
that could really kick off the sell in May and go away.
It could well do, absolutely.
You know, I don't think we saw it last year, did we? So we're overdue now. So perhaps
Very true, and that's it. And I think, certainly when banks go ex-dividend for this payment cycle, we could see a bit of a sell-off in banks.
There's a lot of money out of the system then, isn't there?
Yeah, absolutely. And I guess too, Dan, on another topic, haven't got a great deal of information about it now, but we've got a couple of interesting IPOs coming up. We'll sort of lay the seed, I guess, so to speak now. Again, not a great deal of info, but we'll be coming out, hopefully, with a bit more detail over the next couple of weeks.
That's sort of the market too, Michael, isn't it? You know, everybody's been into the blue chips, and now the emerging leaders are starting to get a bit of a push along. So
yeah, very true.
Bit of a hint.
Yeah, definitely. I think that's us done.
I think that is. Thank you.
Thanks again.